Good morning, grade 10s. We are on page 170 in your textbooks, and we're going to talk about the withdrawals of merchandise or any other item. Okay, so when you normally, or the owner normally withdraws something for personal use, it's called drawings. Okay, so drawings will be debited. Why? Because drawings is the owner's equity account, and it will decrease the owner's equity on the debit side. So that's why we debit drawings. Okay, so you can take anything, stock, consumables, stationery, equipment, vehicles, whatever you are taking out, that will be the account that is your contra account or other account when we work with drawings. Okay, so the business entity rule is here. Okay, so it says that you can take anything out of the business for private use as long as you record it. Okay, in these cases you're going to take it out at cost price because you don't want to make a profit out of yourself. Okay, so let's look at an example. Bottom of page 170. Owner took stock costing 500 Rand for his own use. Okay, so stock or trading stock is something that we take out. Okay, so page 171 at the top. So drawings will be debited because drawings makes the owner's equity less on the debit side. Okay. Trading stock, that is what you're taking out. It decreases your assets, so it will be credited. And then you just write stock taken by owner for personal use. There's nothing that affects debtors or creditors over here, so you don't have to write anything in the general journal apart from this transaction. Okay, and it's a general journal voucher. It's a number 1 that we put in this side. Okay. Now putting it in the general ledger, drawings will be debited. It makes the owner's equity, remember this is owner's equity, makes the owner's equity less. And assets, this is assets, the trading stock, it becomes more on the debit side and less on the credit side. And if you're taking it out of the business, remember it's not in the business anymore, you're going to credit trading stock with 500 Rand, and you're going to write general journal number 1. Okay, then drawings increase on the debit side, trading stock decreases on the credit side. Okay, so it increases. Okay, so drawings as such increases, but you know how to put it, that you must put it on the debit side because it decreases owner's equity. Trading stock is an asset and decrease on the credit side. Okay. Drawings, as we said, has a negative effect on the owner's equity, and I normally teach you to work it out which side to put it by thinking of drawings as owner's equity. Then you don't become confused by that, by the drawings increasing or decreasing. Okay, so each time the owner makes a withdrawal, the owner's equity decreases, and as we said, the owner usually withdraws the stock at the cost price, not at because he doesn't want to make a profit out of himself. Okay, if the owner is unhappy with the stock, he can take the stock back, and then you just reverse the original entry. So this original entry, you're reversing it, so you will credit drawings then with trading stock and debit trading stock, and then you're getting the trading stock back again. It increases on this side, and then your drawings will be cancelled out by putting it on the other side. Okay, in the above example, the owner withdrew trading stock. If he took any other item, it would have been, if it was, for example, consumables, you would have written consumables here at the top. Okay, all right. So if it was consumables, you would have, in place of trading stock, you would have written consumables. If it was equipment, you would have written equipment, etc. Okay, so let's look at an example at the bottom here. The owner took stock costing 500 Rand and consumables 90 Rand for his own use. Okay, so it's two things that's withdrawn. So its drawings is actually 590. So we're going to write drawings will be debited, decreases the owner's equity, 500 Rand. Trading stock is an asset and will be credited. and you write stock taken by owner for personal use. The second one, you could have said drawings again debited, and consumables, the thing that you took out, 90 Rand, will be credited. Consumables is the expense, consumables taken by the owner for personal use. Nothing affected in debtors or creditors. Okay, now, the transactions relate to 2 items withdrawn on the same date. Okay, so now you can combine it. So you just write drawings once and 590, and then credit trading stock and consumables, both like you did in the example here at the top where you keep it separate. Okay, and I would have added here stock and consumables taken by the owner for personal use if you wanted to combine it. Okay, let's look at that now. Balance sheet account section, drawings will be debited. Okay, and there you see it makes the owner's equity less. Trading stock is the other account firstly, and then consumables, general journal entry number 1, and we add them together, and in this case they balance the whole account, but normally it's not needed. You can leave it as is, but in this case they also carried it down and then brought it down again. Okay, so this side was the biggest, that side we make the same. We add the 590 there because that's a balancing figure, and then bring it down on the debit side. Okay, there you see at the top of page 173. Okay, trading stock is credited, becomes less. The other account is drawings. Okay, and then consumables, normally expense, normally debited, and now we're going to credit it, or the consumables we're going to take out, and you're going to put it on the credit side. Both of these are credited, the other account is drawings. Okay, so that was drawings for personal use.